One of the most popular dividend stocks out there is the Coca Cola company, stock ticker KO, currently trading at $62.69 per share. Now, this is a popular stock for a multitude of different reasons. One of the reasons is Warren Buffett is heavily invested in this stock. But we can also see it's a company that's been increasing the amount they pay in dividends for over 59 consecutive years, making them a dividend king. And we can see they've really outperformed the market over the past year. They're up 16.68%. This is also one of the most researched stocks in the United States. Now, I'm no stranger to this stock as well. As we can see, if we jump into my do-it-yourself investor toolkit, this is actually a company, as you can see right here, I invested in a while ago, and I'm up almost 30% on my Coca Cola position, and it takes up about 5% of my dividend portfolio, as you can see right here. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Coca Cola and decide if it's a stock we should consider buying. We're going to be looking at 4 different valuations. We'll be looking at Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model, and all 4 of those valuations will roll into our output tabs. Let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here, and we will plug in the stock ticker KO and hit enter, and you can see all of this data is going to automatically load in. We're currently looking at a 365-day change chart. You can see they recently had a pretty large dip, but they've recovered fairly well, currently back to $62 per share. If we come over here, we can see they're paying out $1.76 per share, which gives them a dividend yield of about 2.81%. Now, the payout ratio is sitting at about 75%, which as a value dividend investor is a little bit higher than I typically like to see it. But when you look at a company like Coca Cola, they really tried to reward their shareholders in the form of dividends more than anything else. So it's really not as much of a red flag as it typically would be for most companies. Now, if we come down here, we can see analysts currently have a target price of $66.50. For this company, we can see institutional ownership is sitting at around 71.5%, and the beta for this company very, very low at 0.57%, so you should not see a whole lot of volatility with this company. But if we move forward, let's look at our first valuation, and that's going to be Graham's valuation. And this is actually a valuation model invented by Benjamin Graham, who is one of Warren Buffett's mentors, and here's the formula he lays out for us to calculate intrinsic value. So we have a few different variables that we need to plug in. We have earnings per share listed right here. We have a growth rate projection. We have the average yield of AAA corporate bonds and the current yield of AAA corporate bonds. So we can see after we plugged in all of these variables, we get an intrinsic value of about $28.79 per share. That is drastically lower than the current trading price for the company. So we're going to keep moving forward, but we're actually going to come back and talk about this just a little bit later. But let's go ahead and look at our discounted cash flow model. And in order to perform a discounted cash flow model, we need to project a growth rate to the future free cash flows for the company. So what we're going to do is we plug in the historical free cash flow for Coca Cola, and this allows us to see our year-over-year growth rates. And we can see over the past around 8 to 9 years, they've had an average growth rate of about 5.87%. Moving forward, I'm projecting a free cash flow growth rate of about 7.5%. to the future free cash flows of the company and the terminal value, which is the sum of the future free cash flows past the year 2030. We then took the present value of those future free cash flows, as you can see right here, and added them together, added Coca-Cola's cash and cash equivalents, and subtracted out their total debt to get their equity value. And once I had the equity value, I divided by the number of shares outstanding to get a discounted cash flow price per share of $59.71. That is a lot closer to that current trading price, as we can see right here. Now, the next valuation that we're going to look at is our multiples valuation. And I do like this valuation model because it allows us to see how the market is valuing companies that are similar in structure. Now, we don't have a lot of good comparables for Coca-Cola. Obviously, we have Pepsi. Monster is a fairly decent comparable, but essentially what we're doing is we're taking their stock price, dividing by the earnings per share to get that price to earnings multiple. We then take the average price to earnings multiple for these companies, multiply it by Coca-Cola's earnings per share, and we come to an intrinsic value of $81.49. Now we can see the average price to earnings for these comparable companies is around 0.73, and if we jump over to our stock screener, scroll down, we can see Coca-Cola's price to earnings is sitting at around 27.48. Could be an indicator that they're slightly undervalued in the market. Now, moving forward, we're going to look at one more valuation, the dividend discount model. This is a very important valuation for me personally because, like I said, I'm a value dividend investor, and this valuation model values a company based on how much they pay out in dividends and how much that dividend is increasing over time. So you can see right here, I plugged in their quarterly dividend payouts over the past few years so we can see how much they pay out each year. And this allows us to see our year-over-year growth rates, just like our discounted cash flow analysis. But this time we're looking at the dividend growth rates. So the average growth rate over the past few years is around 3%. Now moving forward, I'm projecting a growth rate of about 3.5% and a discount rate of 8%, which gives us a dividend discount model price per share of about $40.48 per share, a bit lower than that current trading price. So let's go ahead and jump over to our output tab, and you can see here we're looking at our 4 valuations, but I'm actually not using Graham's valuation because I don't think it provides a fair value for Coca Cola specifically. When you take an older company like this, I just don't think that Graham's valuation considers the important business aspects of Coca Cola's business model. So I'm not going to use that valuation model in this scenario, but you can see discounted cash flow at 59.71, multiples at 81.49, and dividend discount model at 40.48. And when we average those 3 together, we come to an intrinsic value of $60.56 per share. Now that is very close to the current trading price, but it looks like they might be slightly overvalued at its current price. Now, as a value dividend investor, we do always want to apply a margin of safety. So let's say we apply a 10% margin of safety. When I hit enter, you can see our acceptable buy price is about $54.50 per share. So our spreadsheet is telling us now is not the time we want to be buying this stock. Now, like we saw earlier, I actually do already own Coca-Cola in my personal portfolio, but I was actually able to buy in at a really great price a few years ago at around $48 per share. So you do have to be looking out for opportunities, constantly performing these valuations to find out when a good time may be. You have to keep in mind companies like Coca-Cola do typically trade at a premium, so it's not very often that they drop down into that buy range. A lot of people will simply buy them because they trust so much in the product, in the company, and they think it's going to be a company that will exist for 30, 40, or even 50 years. So if you're one of those people, maybe you should still consider it at these current prices, but for me personally, I would like to see it go a little bit lower before I added more shares to my portfolio. But there you go. That is my thoughts on Coca-Cola. Go ahead and let me know your thoughts in the comments down below if you plan on buying or selling. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.